Okay, I think we'll make a start. So good afternoon, everyone. Thanks for taking the time to attend today's seminar. My name is Sam Giles. I'm an assistant manager here at Claritas Tax, and I'll be your host for today. Just before we get started, there's a couple of housekeeping points to go through. So everyone is on mute and your videos are off by default, but we would love to know what questions you have as we go. So if you could submit your questions via the Q&A function that you'll see on your screens, Sarah will pick these up at the end of each relevant section. Your speaker today is Sarah Scala, who heads up our tax disputes and resolution service line. Sarah will let you know a little bit more about her experience and the service line she heads up, and we'll cover off the following agenda. So without further ado, over to you, Sarah.
Thank you, Sam, and thank you to everybody for attending this webinar this afternoon. I'm Sarah Scala. I lead the Tax Dispute Resolution Service here at Claritas Tax. I have been working full-time on tax dispute-related matters for almost 10 years now, and my daily interactions involve conversations with HMRC, accountants, lawyers, clients and fellow tax dispute resolution experts. So I'm hoping that through those interactions, I'll be able to offer you some helpful insights into the day-to-day dealings with HMRC. And if you're a fellow advisor, hopefully that will help you to enhance the existing service offering that you make available to your client base. I'll start by briefly explaining what I'm going to cover over the next 45-50 minutes or so. I'm going to give you an overview of the tax dispute resolution service offering here at Claritas. I'm going to explain how HMRC gets to know its customers, or in other words, what information HMRC has access to gather details about you as a taxpayer and your clients if you're an advisor. And then I'll go on to explain how HMRC uses that information, and in particular I will share with you details of what I myself and fellow tax dispute resolution specialists are seeing at present, with particular reference to the pandemic and whether the activity levels have returned to the inquiry levels we were seeing pre-pandemic. I'll go on to give you my top tips for handling HMRC inquiries. And then I'll conclude by explaining what options there are for taxpayers or advisors with clients who haven't necessarily received an approach from HMRC, but they are aware that a disclosure is required of some form of tax irregularity. So I'll explain what routes are available, when they're most suitable and to whom they'll be most suited. Thank you. Next slide, please, Sam. So our tax dispute resolution service offering here at Claritas, we undertake any form of tax dispute assignment across the UK. This includes disclosures to HMRC, the handling of HMRC inquiries or investigations, and expert witness work. Our approach is that we very much welcome informal telephone queries. So I would very much encourage you to contact me and have those discussions. I would be happy to engage more formally should you prefer my advice to be detailed in a more formal context. If you did want to engage, then we could do so with you directly if you're an advisor, or directly with your client. Our clients come from our existing client base, through LinkedIn, for example, by email, and
Hi everyone, it seems like we may have just lost Sarah with a connection issue. I think she's just about to try and reconnect and jump back on as soon as she can. Sorry about this. Hi there, yeah, these slides will get sent out to everyone at the end, and in addition to that, any questions we don't manage to go through during the seminar, we'll also look to attach with answers following the session.
Right, am I back in the room, Sam?
Yep, looks like we've got you back, Sarah.
Right, okay. Issues associated with the office. At least I'm not at home. That's something to be thankful for. So I believe I was up to the contentious tax group. Did you hear me up to that stage, Sam, or did I get cut off slightly earlier?
I think it may have cut off about a minute before. It looked like we
right, okay. Well, let's talk about the credentials in the tax dispute resolution marketplace then. So we're a member of the Tax Crime Alliance, which is a joining together of the private sector, HMRC and the ICAEW. We're a contributor to HMRC Enquiries, Investigations and Powers magazine, which is the go-to magazine for all things tax investigations, with around, I believe, 3,000 general practitioner accountant subscribers. And we founded recently the Contentious Tax Group, which is the bringing together of fellow tax dispute resolution experts and specialist lawyers. And we talk on a monthly basis about our experiences day to day in the handling of tax disputes. In particular, we will discuss topical issues, what we're seeing coming out of HMRC, and one thing that's particularly helpful is any HMRC inconsistencies in dealing with our submissions, so that we can really draw on each other's success stories and through that better service our own referrer networks and our client base. Next slide, please, Sam. So I'm now going to move on to how HMRC gets to know its customers. So broadly, what information HMRC draws upon in determining the risks associated with a particular taxpayer's declared tax position and whether or not to open an inquiry. Firstly, HMRC has powers under Schedule 36 of Finance Act 2008, and those powers allow HMRC to write out to taxpayers and request information that is reasonably required to check a tax return. HMRC also have powers under Schedule 23 of the Finance Act 2011. And those powers allow it to write out to organisations and request data on a bulk scale. So an example might be for HMRC to write out to a letting agency and request details of gross rents on a per landlord, per property basis. And of course, HMRC will then match those gross rental figures to the rents declared by the landlord on their tax return and decide whether there is a potential discrepancy. Another thing HMRC has used more recently are reviews of social media. So, for example, historically, HMRC will have drawn on things such as boarding information from flight operators to check an individual's whereabouts in a residency inquiry. Now, HMRC are able to supplement such sources with reviews of social media accounts where it might be very clear as to geographically where an individual was present on any given date. HMRC also gather information from other government departments. So the DVLA is an obvious one where HMRC will be able to gather details of expensive cars. They also receive information from other HMRC departments through, for example, the filing of documents for stamp duty or capital gains tax purposes. And a real game changer in the world of tax disputes was information received from other governments through, for example, the Common Reporting Standard, which had over 100 countries sign up and agree to share details with HMRC of the overseas assets of UK resident taxpayers. HMRC also have tax evasion and fraud hotlines, and they are being used more and more, particularly following furlough and possible overclaims, either in error or fraudulently. So there might be, for example, aggrieved former employees out there who have, during or post the pandemic, been made redundant, and they are aware that their former employer had asked them to work when they shouldn't have been, and now are in effect whistleblowing by contacting HMRC through these fraud hotlines and bringing to HMRC's attention that their former employer has overclaimed. And then finally, there's HMRC's Connect system, which is reportedly one of the largest databases in the world, and that brings together all of the information I've referred to on the slide so far. So it creates a picture of a taxpayer's expected wealth and income position, and then HMRC can use the Connect system to review tax returns and check that the two sources of information match up. Had any questions come through, Sam, before I move on to the next slide?
We did have one which came through privately, actually, just asking what they should do if a HMRC request is received for bulk transaction data.
Right, okay, well, that's a good question, because I have received news in recent weeks of there being an increase in requests by HMRC under those Schedule 23 Finance Act 2011 powers. My advice would be, if HMRC requests bulk transaction data from your organisation, don't automatically assume that because HMRC have asked, you're definitely required to provide all of the information included, because there are instances when HMRC can sort of go a bit beyond the powers that are available to them. So it's always important to review the request carefully, and if necessary, speak to somebody that is in regular communication with HMRC, such as myself. Another thing to be aware of that can easily be overlooked when you have this letter from HMRC, this request, and you're trying your best to comply with it, is to be aware of your obligations under the GDPR, because you don't want to satisfy the request from HMRC that might have asked for a bit too much than it ought to have, and then find that you've breached yourself as an organisation the GDPR rules. So you should, as an organisation, have somebody that takes responsibility for that, and it's probably best to run the request by them before you submit the information. Next slide then, please, Sam. So I'd now like to go on to HMRC activity. Where are we now? And I wanted to begin with bringing to your attention a couple of things that have been reported in the news and social media lately, and just to give some context to them. So the first thing that I believe was reported back in March, February or March of this year, is that in the 6 months ended 31st of December 20, HMRC opened 126,000 tax investigations. It was also reported that in the same 6 months of the following year, so the 6 months to 31st of December 2021, HMRC opened 137,000 tax investigations. So I don't want to be too concerned with the numbers, but the report suggested that this meant a ramping up by HMRC of their inquiry work. And I just wanted to share with you my own experience and that of my wider network, which is that as far as we're seeing, HMRC activity remains relatively slow. So I suppose the message is that if you too are not seeing HMRC activity increase on your client base, just be aware that it is set to increase further, and we're expecting it won't be until summer, possibly later, that we're back to pre-pandemic levels. So it's just important to know that you've got somebody you can call upon if needs be, because obviously when an HMRC inquiry is opened, it's very important to act fairly quickly. The second report I'd like to mention is that this was around about back in December. The Treasury had to sort of report and accept that it only expects to recover about a quarter of the £6 billion that was lost to fraud and error across the COVID support schemes. So a lot was made about the fact that only £1.5 billion was expected to be recovered. But from the point of view of a taxpayer or an advisor to a client portfolio, I think we should focus on that 1.5 billion figure and acknowledge that it is still a very large amount of money. And the government has invested £100 million and 1,200 staff in a taxpayer protection task force, which is going to be attempting to recover these monies. So there will be a lot of inquiry work that comes and explores the claims made for COVID support. So again, it's just important to note that whilst the press focuses on the amount not to be recovered, HMRC are doing a lot to recover this relatively high number. In terms of our experiences of ongoing inquiries and whether HMRC have managed to resume those and get their resourcing back to where it needs to be in order to progress those inquiries, we're seeing that HMRC are now writing out to clients and saying, we're ready to resume work on this. Is that okay? Are you ready to resume a dialogue? For example, I have a colleague, Naj, who works in our corporate tax team, and Naj said to me, Sarah, I have a new client who has received a letter from HMRC to say that they intend to resume the inquiry, but the client doesn't actually know what the inquiry was about. And because this client is new to Claritas, and the inquiry was paused by the former advisor, we don't have any papers. The former advisor didn't offer us any when we wrote for professional clearance. We were told to revert back to the client. The client claims to never have received any from the former advisor. So my role was, in the first instance, to get copies of this paperwork, and then to, having done that, I've set up a call with HMRC to discuss what turns out to be a very large issue. So again, it might very well be the case that in the 2 years that have passed, you've taken on clients and now an issue has come to light that you might not have been involved with. So I'd be very happy to offer you my support or a way in through my connections if you were in a similar position and needed to obtain papers. The final thing I'd like to say on this is that recently, back in March, the HMRC and the ICAEW have released a short film called All Too Familiar, and it's a very entertaining watch if you haven't seen it. A lot of money has clearly been invested in it with some well-known actors and actresses, and what I'd like to say is it brings to your attention the importance of the Know Your Customer checks. And the film concludes with a HMRC raid on one of the advisors. So this is clearly something HMRC are invested in publicising. The lawyers I'm talking to are certainly investing time in offering their services should HMRC raid occur, and in marketing those services. So whilst raids are unlikely, they can be catastrophic to a business and include, for example, possible seizing of computers, etc. So one thing I'm going to be rolling out to my colleagues in the first instance, but then possibly to clients and referrers, is a training session on raids policy, the importance of having one, the importance of making sure that your organisation knows that there is a policy and what needs to be followed. So if anybody would like to talk to me about that and potentially have the presentation delivered, then please do let me know. Okay, Sam, next slide, please, unless there are any questions that have come in.
Yeah, one did come through actually, which was just to ask what sectors are HMRC currently targeting?
Well, following on from what I said a short while ago about the bulk data requests, I have heard of, particularly in the north of England, HMRC have been writing out to takeaways and restaurants following a bulk data request and receipt of information from Just Eat. So that's one thing to be aware of. What HMRC have done is they've gathered the sales information from this Just Eat, the online food delivery platform, and then they've compared those to sales declared by businesses, and in particular they've identified where the sales provided by Just Eat are in excess of the VAT registration threshold. Yet the businesses haven't registered for VAT. So that's something that to watch out for, and something that HMRC are keen on. Another thing is, of course, for a long time now, HMRC have been focused on research and development inquiries, in particular in relation to property development companies and the construction industry. One thing that I am very happy to do is, if there are any businesses that are feeling as though their research and development inquiries aren't progressing as they would like, or perhaps are even going backwards if the claim is being challenged and actually reduced by HMRC, I'd be very happy to review the original report and any communication and see if we could add any value there in terms of bringing the inquiry points under control and to a close. One thing, for example, that happened recently is I offered such a review to a business, and I discovered that there were 7 of the group companies all with a research and development inquiry, yet there were 5 different HMRC inspectors dealing with those 7 inquiries. So even before Claritas has offered advice regarding the merits of the claim itself, an immediate task was to suggest that HMRC ought to offer a single point of contact, which is something they offer. So it's understandable if a taxpayer thinks that the approach being taken is the only option, but unfortunately, sort of, if you don't ask, you don't get. So in that case, the first step is to get one caseworker, because it's no doubt easier to reach agreement with one as opposed to 5.
That's great. We've just had one more as well, Sarah, just on this
Okay.
point of the bulk transaction data.
Yes.
Just if you could explain what these bulk data requests actually are.
They are requests that can go to a large organisation, for example, that holds a lot of data about taxpayers. So HMRC requests the data, and it usually comes through in an electronic format. So it's easy for HMRC to manipulate and to view the data across a large number of taxpayers. It's a very efficient way of HMRC gathering information to compare to tax returns and then write out.
That's great. Thanks, Sarah.
Next slide then, please, Sam. So I'll now move on to what I think is one of the things that attendees are keenest to hear about today, which is the handling of HMRC inquiries. So these are tips really from me as to how I generally manage my inquiries and what works for me in terms of getting them to progress more quickly towards settlement and for the right tax figure ultimately. So the first piece of advice I would offer if you're an advisor is, should your client receive an inquiry letter, please don't assume that that means other clients will necessarily receive an inquiry letter just because you're the common advisor. Your clients really need you to continue to act because you know your clients best, and to bring in specialist support if necessary, which will not always be the case. It might be that you are relatively comfortable dealing with the points that have been asked by HMRC. But as I said, you know, I'm always happy to have a discussion and just to give you a sounding board through the process if necessary. In terms of reviewing that letter that's come in, whether you're the taxpayer or the advisor, I would firstly check that the inquiry has been opened in time. HMRC generally have a year from receiving a tax return to raise inquiries, so I'd just check the dates there. And then I would go on to check that the questions being asked do actually relate to the entity to whom the letter is addressed, the entity under inquiry, and that the information is reasonably required. You may want to speak to somebody in the tax disputes world to check that, which again we can assist you with. So you've received the letter, you've considered whether the inquiry is valid, and then of course if you're an advisor you should discuss the letter with your client. When you go through the HMRC requests, in some ways you could treat it as a bit of a wish list. All points will need to be satisfied. But it might be the case, for example, that HMRC have requested some information in a specified format. For example, I have a colleague and one of his clients has an inquiry, and HMRC have requested the copy of a contract to support an agreement to split sales proceeds 50-50. And no such contract exists. So I've advised my colleague, and therefore the client, that just because the contract doesn't exist, it doesn't mean that there's no agreement to split the sale proceeds 50-50, and that isn't what happened. But to satisfy HMRC, I've suggested there might be some other form of evidence, contemporaneous evidence, such as an email, note of a meeting, text message, anything that in the absence of a contract could go some way to satisfying HMRC on that point. And then when you have your discussion with your client and you're going through these points, another thing I would do is, from the outset, I would be clear in my own mind as to what I think caused the irregularities, what type of behaviour we're going to go for ultimately with regards to agreeing a penalty percentage. And you might think that's a bit premature, but the earlier you have in mind the behaviour that you're going to put forward to HMRC, the easier it is to frame each of your responses to HMRC to support that behavioural point. And if you think, well, I can't actually make that decision yet, possibly you need to have further discussions with your client, because if you're not able to determine the penalty yet, you might not have as much information as might be reasonable to respond to the initial inquiry letter. So once you do enter into that dialogue, which usually takes the form of written responses, how can you make sure that you reduce the possibility of delay, which is one of the things that people get most frustrated about with HMRC? Well, what I would do, and what I'd advise you to do, is firstly, check that you have email protocols in place, if that's how you'd like to liaise, if you're content with email communication with HMRC, because it can be very frustrating if you're chasing HMRC's response to your letter and then you are told it was issued 2 weeks ago, and if only those email protocols had been in place, you would have had it sent over electronically. It's very straightforward. You just have to check with your client that they accept the risks of email, and then let HMRC know and tell them who in your organisation can receive the email communications. Another thing I would do to combat or reduce delay is, if there is a letter that needs to be responded to on either side, either by yourself or HMRC, and you can't respond in full because there's one point that remains outstanding, is it reasonable to produce a part response with the outstanding point for which you awaiting information could follow later? So that's what I would do there. And one thing that I see quite a lot, which I do find frustrating, possibly because I'm a maths graduate, but I'm asked an opinion and it's not clear to me exactly what figure is at stake. What is the tax? What are we fighting for? And that's good on both sides. It's good for the client to know how much to invest in a dispute-related matter, for example, and how far to take it. But it's also important, in my opinion, to always remind HMRC, because it might affect the ability to reach an agreement and perhaps concede on one point if another is allowed, and take a more pragmatic approach. Next slide, please, Sam, unless there are any questions come in.
We've had a couple through.
Okay.
The first being whether you've got any tips for dealing with a change of HMRC caseworker.
Right, well, I'd say probably second to the HMRC delay. That is the second most frustrating issue. And unfortunately, it happens more often than we would like. I think my advice would be, in the first instance, if you receive news that your current caseworker is departing, don't assume that HMRC will be quick to give you a replacement or to tell you who the replacement is. So you should start chasing ASAP and ask for the contact details of the new person. When you have those, I would usually request an introductory call so that we can just bring each other up to date on where the inquiry is up to. I do that with caution because, of course, you don't want to offer too much information on behalf of your client over the phone. More of a, don't give too much and take information that HMRC are prepared to offer, but limit your input to just the facts of the inquiry. But it is good because it will give you a feel for the type of individual you're dealing with and how helpful they'll be throughout the remainder of the process. And then you might want to consider sending them, it will be sort of an extra piece of correspondence, but it might be worth your while doing a letter bringing together all of the inquiry points to date, like a summing up of where things are up to, and providing copies of any historic correspondence you might want to bring to the new caseworker's attention, because it just makes everything that bit easier for them to pick up where the last person left off, and ultimately should save you time and potentially professional fees for your client.
Great. There was one other as well, just asking how you'd respond to a current inquiry if within it it's referring to information that's too old to retrieve, for instance, personal bank statements that are over 10 years old or completion statements on property.
Well, I think the first thing is, if the information, there's a reason it cannot be provided, it's best to say so. Rather than leave the points unresolved and be fearful of just stating the facts, really. And then HMRC should be accepting of the fact, because there are various legal requirements as to for how long information can be kept and should be kept. And then I would open a dialogue with HMRC and say, so how best should we resolve this? Where possible, research can be carried out. If there's no completion statement, for example, that doesn't mean that there isn't data available elsewhere confirming sale prices, for example, particularly in the modern world with websites such as Zoopla, etc. If you can create estimates of figures, then that is of course helpful, and there are various ways of estimating various things. So provided something is estimated on a reasonable basis and supported, that should be potentially agreeable with HMRC. So my advice would be that I suppose it depends. There might be a number of ways of dealing with that issue, and it's a case of considering what they are and being able to support the option you go for, and illustrate why you thought that was the best approach.
Okay, thanks, Sarah.
So that brings us on to the remainder of the presentation, with about 15 minutes to go. So we're going to talk now about knowing the disclosure routes available to your clients, or yourself, of course, if you're a taxpayer. So we've covered so far the information HMRC has available to it, their activity levels, how to handle an inquiry. This might be most relevant where there is no inquiry, but there's certainly an issue that needs to be disclosed to HMRC. And of course, it's advisable to do so before HMRC open an inquiry. So I'm going to briefly cover the Worldwide Disclosure Facility, the Digital Disclosure Service, the Let Property Campaign, and Code of Practices 8 and 9. I'd just like to caveat by saying that As advisors, our role is to consider the facts of an individual taxpayer's circumstances and put to them the possible disclosure routes available to them, with the pros and cons of each one and the level of risk attached to each. Not necessarily for us to say this is certainly the road to go down for you. So I'll have the next slide, please, Sam. Brief details of the Worldwide Disclosure Facility. It opened on the 5th of September 2016 to replace a number of other disclosure facilities that closed at the end of the previous year. Who can use the facility? Well, it will be suited to anyone with an offshore, a UK tax liability arising in relation to an offshore asset. There are very harsh penalties with regard to the offshore element, but individuals and companies that disclose using this route do need to disclose all irregularities, which might include some aspects relating to assets held in the UK. If that's the case, the high penalties will only be charged on the offshore element and the standard penalties on the UK element, but it still must be complete and full disclosure. Next slide, please, Sam. The digital disclosure service works in a similar way, but this will be used to disclose for individuals and companies who don't have offshore assets. So this is all encompassing if the Worldwide Disclosure Facility isn't suitable. It's used for relatively straightforward disclosures that didn't arise due to deliberate behaviour generally. Next slide, please, Sam. And then the Select Property campaign, which has been going on for such a long time that people would be forgiven for thinking that it's no longer up and running, but it is. And it's the opportunity for landlords who owe tax through the letting out of residential property in the UK or abroad to bring their tax affairs up to date. It's open to all residential property landlords, and most suited where there is no aspect of deliberate behaviour. Again, it must include all tax irregularities and previously undeclared income or gains, whether or not they relate to property, but there needs to be one element relating to property in order to be qualifying for this disclosure facility. Next slide, please, Sam. So Code of Practice 8 is the set of rules HMRC's Fraud Investigation Service adhere to when they investigate a taxpayer on a civil basis and fraud is not suspected. It's latterly been the route used by HMRC to open an inquiry that has arisen as a result of a disclosure through, for example, the Worldwide Disclosure Facility. And HMRC might do that where the sums were very large, in particular where there's some sort of residence or domicile query and challenge. Given that it's the Fraud Investigation Service that are working to this code of practice, it probably is worth having some form of discussion with a tax dispute resolution expert if you're considering Code of Practice 8. And then it might be that that initial discussion is enough, but it's just worth considering what support you might benefit from. And the next slide, please, Sam. And then this Code of Practice 9, which is again a code of practice adhered to by the Fraud Investigation Service. However, in this case, there will be some aspect of tax fraud, so it's even more important to consider seeking specialist tax investigation support. One thing to note is that HMRC can write to a taxpayer offering this route, as opposed to the taxpayer approaching HMRC to make a disclosure. Because Code of Practice 9 is used to deal with tax fraud and in particular deliberate behaviour, if HMRC write to you or one of your clients offering this route, I'd suggest careful consideration before it's accepted, because acceptance of this option is an immediate acceptance of deliberate behaviour, which means that those deliberate percentage penalties will apply when it comes to the penalty negotiations. So who's suitable? Well, this should always be considered if the taxpayer is accepting of that they behaved in a deliberate way. And the main advantage of Code of Practice 9, well, there are a number really. I mean, it's a very methodical, formalised process which gives the client peace of mind. But the main advantage is the immunity from prosecution that it offers, provided that the taxpayer fully discloses and cooperates throughout the process. Next slide, Sam. I think that brings us to any final questions.
Yeah, so there's been a couple that have come through. The first around the digital disclosure service and whether it's possible to disclose in letter format.
I was asked this quite recently, actually, by one of my fellow tax dispute resolution experts. And the way I explain that I use this route is I've learnt the hard way that in the very early days, I would be making a detailed written report, sending that in by post. And then I would also use the online portal as HMRC requests. But after giving HMRC the month or two it requests to review the disclosure, I was finding that the submission via the online portal had been reviewed and received, but clearly they hadn't matched that to the written report, which offered all the detail and explanations of why the figures were what they were. So I believe that you can enter text of about 500 words through the portal, but rather than do that, because I tend to want to give a more lengthy explanation on behalf of my clients, I have a person at HMRC who I email when I have a disclosure to make, and I say to them, you have in the past accepted my disclosures in a report format via email. Is this okay this time as well? And they usually say yes, no problem. Send it to me when you're ready, and I'll make sure you've got a designated person that's going to review it, and I'll decide upon that person depending on what tax it is you're telling me about, so that I can make sure I've got an appropriate specialist to conduct the review. So I'm not sure how many other people do that, but it's working quite well for me. So if anybody is encountering problems, very happy to discuss that.
Brilliant. There was just one other which we can try and squeeze in, and they're just asked what happens where there's a landlord who's overseas and the rent is well below the personal allowance. They're asking, does the landlord still need to submit something?
I'd have to have a proper look at that. So that's a non-resident landlord as well, I presume. But if that person would like to send their question through, or we'll just capture it, then I'll have a proper look into that, and if necessary, ask our private client colleagues for their input.
That's great. And I suppose on that note, we can wrap up really. So on the next slide, we've got Sarah's details there for that individual if they want to contact her. All that's left to say is a big thank you today to Sarah Scala, and once again to everyone else for taking the time to listen into the webinar. I hope everyone took something away that's useful for you, and if you do have any other questions, the details are on the screen if you want to contact Sarah. So with that, our next webinar, where tickets are going on sale 2nd of May, is in June. And that will be focusing on patent box protecting people's intellectual property. We'll be also circulating the slides from today to all attendees. And if there are any other questions, we'll look to integrate those into the email that goes out with answers as well. So thank you again, and enjoy the rest of your day, everyone.